Alright, we're going to make a very important distinction about the bars that you use to mark off the peaks or the highs and the valleys or the lows. This is just taking into consideration the high of each bar and the low of each bar. So we'll take this bar for instance. We mark off the high and we mark off the low. See, we can see that the next bar preceding it was actually completely encompassed within it. So its high was lower and its low was equal, or it can be higher. What this means is the fact that we actually take this bar right here and discount it. We wait until a bar either breaks the low or the high of the previous bar before we count it as a new relevant bar. Let's go back and take a look at this. This is really important when marking off the highs or the lows of your session. We'll start by marking this high. Now this is where it helps us, because as you can see, this green bar right here actually is a bit lower than this previous red bar. So if we were following the peaks and valleys, technically this would be lower, but it would also be higher. So what we do is we just draw, either in our heads or actually on the chart, if you're just starting this, a box around these two. Since this box of the high and the low of this bar actually encompasses this previous one, we don't draw a low here. We just consider this to be one bar in a continuing higher highs and higher lows of each of these bars. Which brings us back to here, which is our low. So we'll just mark that off. Now this bar is a low because the bar prior to it, it's breaking its low and it is not contained within it. So this bar prior is actually our high. So we'll mark this off now. Moving back in the chart, we get all the way back to here, which is our low. And then our high prior to that. And why was that? Because it broke the high of the previous bar. So it itself is a valid reference bar. Our low and then our high prior to that. This becomes more and more relevant when we start getting wider ranging bars, like back here. So, since this market dipped down to the low here, came back up, and this bar did make a higher high, we look at the next bar though, and it outranged this previous bar. So we draw an imaginary line around it, or we actually physically draw a line around it, and we see that it is encompassed by the bar after it. So we consider this to be one single bar right here, with the high being here and the low being here. So we'll draw our session low here. This is just building up the rules in our head that we're going to use when we're identifying these highs and these lows, and trying to pinpoint the higher highs and the higher lows accurately. When identifying these highs and lows, you only need a 2-bar formation, as you can see right here. We'll mark off the low, and then the bar following it broke its high, even though they were both wide-ranging bars. And if this bar had started below this one and broken into a new low, it would have also been considered another low. It didn't, and it actually took a few bars to actually make that low, which was, looking at this chart, this bar was followed by this one, which actually was lower, so it did break down. This bar was a lower high and a lower low than the previous one, followed by another lower high and a lower low. But this was our current new low, so we'll mark that off. Followed by a bar that broke its high and had a higher low, so this is our new high. And as we can see, it's a lower high than the previous one. The market fell down here and gave us our new low, followed up by a lower high, continuing this down pattern. We'll look at a couple more examples. We've changed this to an open, high, low, close bar format to just make it a bit easier to visualize. And we're going to start marking off every bar's high and low to show you when a bar is encompassed by another one. We'll start here, where this bar has a high and a low that encompasses the bar past it. So we would consider this to be one bar. But when that is broken, even by a smaller bar, it still counts, and this would be marked as our high. The bar after that, again, has a lower high and a lower low, so this is a new bar right here. The bar after that, again, lower high, lower low, so it's its own unique bar. Continuing on, the bar past that, again, has a lower high and lower low. And the bar after that has a higher high and higher low. And even though it's minor, the bar after that again has a slightly higher high and a higher low. You can see that most of the time, you can just eyeball this. But it does help to actually draw it out to get a full understanding when you come up to a situation like this, where this bar encompasses the one prior to it. So we would consider these two bars to be just one with a higher low than the previous relevant bar and a higher high than the previous relevant bar. You'll start spotting these more and more, and you won't even need to outline them. Immediately, I see this one as encompassing the bar prior to it. Similarly, this bar again encompasses the bar prior to it. In extreme situations, one bar can actually encompass multiple other bars. This rule holds steady. We're just waiting for a break of a relevant bar. In this lesson, we've gone over identifying the highs and the lows by understanding what bars are actually considered relevant. Only those that are breaking either the high or the low of the previous relevant bar.